following trading day, then I'm going to try to take the trades early because everybody's going to be in here trying to do something at the opening bell. And it's also a Monday. So because nobody blew up anything and we didn't go thermonuclear over in the Middle East, everybody wants to go in and take a lot of trades. So there's going to be a lot of volatility. There's going to be a lot of interest in trades right away. And I want to be in when the market's the cleanest. And how is that going to be determined? Well, what I taught you last week at 7 o'clock to 8 o'clock. I'm going to use that first 30 minutes post 7 a.m. and that's here. Okay, so here's 7 o'clock to 7:30 right there. Okay, so what did we form? That high, that low. That's why I'm delineating those levels. Okay, in case you have forgot last week's rules. So we traded down below it. Okay, so now we're going to wait and see. Does it want to come back up and upset these here? Knowing full well that the new week opening gap is down here for this week. August 11th, that's Sunday opening from Friday's closing settlement price. That's what the new week opening gap is. So since it's below it, and then the next new day opening gap is last Friday, the 9th, where is that? Down here. So all we're going to do for guidance, all we're going to do is follow the rules I gave you last week. We're going to wait for the market to be made jagged on the opposing side of where these inefficiencies are. Isn't that easy? All you're doing is waiting for them to run up, take out the smooth areas right here, and they ran through the previous highs, and then did what? We break lower, and then we have displacement in here. So if we go back through all this price action here, we can then start looking for, hang on one second, I thought I had my laptop plugged in. I'm in the